The conclusion of the Fed meeting is today, and we get their interest rate decision along with words from Jerome Powell. We need to talk about it. I am Dr. Stock, Doctor of Education, and today, being the first day of May, if you hold your calendar up to a mirror, you're going to end up with something like a sweet potato. All right, we're going to take a look at the economic calendar today because we also have a few more things to pay attention to. Then we'll take a look at the charts. I have something absolutely critical to show you about SPY, and then we'll get into some of the other usual things that I cover here, such as Enphase, Tesla, NVDA, and then I'll also touch on some of the earnings out there that I think have been critical that have come out, and we'll give further commentary from there. So let's move right into the calendar. So putting up trading economics, you can see 8:15 a.m. today, ADP employment change. So we're looking for strong numbers coming out of there. The softer that they get, the more that could point to less demand for those jobs. So we'll be watching for that one. Treasury refunding amount announcement for all you TMF fans that are out there. We're looking for demand from those treasuries. And then moving on from there, manufacturing information coming out. We want to look and see if we end up with expansion or contraction or something that's a little bit more balanced. So above 50 is what we're keeping our fingers crossed for. Below 50 can point to a contraction in manufacturing. Not necessarily strong for the markets. Jolt's going to be huge at 10 a.m. as well. So be looking for that one. Super soft numbers here can point to less demand for jobs, which could also point to something like recession. So we want to be on the lookout for that as well. Strong numbers there, of course. While that's great for saying that there's a lot of demand for jobs and for labor that's out there, when we move on down to 2 p.m., 2:30 today with the Fed interest rate decision and the Fed press conference, the Fed looking at that information coming in, which they probably already have access to, probably prior to us having it at 10 a.m. That's something that is also going to weigh into their decisions and also inform what they have to say during the press conference, especially. Now, along the lines of the Fed rates, right now, still 97.5% chance that we're going to stay where we're at, 2.5% chance that we get cut. Does a rate cut translate into bullishness for the markets? Not necessarily, because if they cut earlier than expected, that could signal trouble going on with the economy, especially where the banks are concerned. And that's one of the areas of alarm that could be out there, along with geopolitical tensions that we have, and then also demand for U.S. treasuries, servicing debt, all those things that we're looking at. And so causing panic in the markets with an unexpected rate cut could spook the markets a little bit, and we'll see if it does play out that way. I always said stand the chance of being wrong. Can't get it right all the time, but that's what I think will happen based on how I see the market playing out right now. Moving over to the SPY, you can see that we got rejected off the 50-day, and so I did end up taking a short position on the SPY. As a matter of fact, a short position, triple leverage on this using SPXU. Posted that over in the Discord. If you want to see my buys and sells, come on over. The link's down below for the Patreon. The Discord's part of that. And the massive thing that I want to show you, so we can see the bearish divergence that we had with the stock market going up, and you can see the RSI going down, and eventually we crossed down through 50. We had a sell-off, and now we got rejected at 50 again on the RSI. Now we're back in bearish territory, and certainly that Fed meeting is one of the things putting pressure on this. Corporate earnings are another thing from what we heard from Starbucks, for example, with the soft demand for their products and services, and their push to change things around for the business to kind of reignite things for them. They sold off significantly in the after hours following their earnings report, and then, like I said, the Fed meeting is another thing weighing on that. Now, if we go out to the monthly chart, I want to show you this. If we go out to the monthly chart, that's a weekly chart. Let's try again, monthly chart for SPY, and we take a look at the momentum of the market. What do we see? Well, actually, let's take a trip down memory lane here, and we're going to go back to .com type days. And when you look at .com type days, you have massive overbought with a decrease in that momentum looking at the RSI, and eventually we fail to make it back up to that overbought territory. We get rejected. And the next day, as we start to sell down, that really tipped things off and led to that significant sell-off all the way up through 2003. So that bearish divergence that we had as the market went up and then sold off, where do we find ourselves on a monthly basis here? If you look across these tops that we actually have over this time that the market generally went up, going all the way back to the beginning of 2018 up until now. We have failed to get a higher peak than what we had back in 2018. We did pretty well with it in 2021, sold off again. Notice that we still are generally bullish, though, as we stayed above 50 most of the time, with a few dips down below it, including the pandemic and including the inflation scare that we had back in 2022. And we are back to the top trend line that we have here, what are we doing? We're selling off again. And so if we actually go out to the quarterly chart, so 3 months at a time per candle here, you can even see even better the decrease that we have in momentum. And then if you look forward to 2018 again, so this one's showing that peak and being its summer 2018, so July 2018, and then being significantly down from there, it is possible that we start to see a further correction coming in the SPY. And so that's something that I think is absolutely worth paying attention to. Will we sell off more or not? Will we get more of a correction coming in? Will we have more pain coming to the markets? I think the technical indicators, along with what we have happening on a macro scale, make it something that is actually plausible, something within the realm of possibility, and we need to be prepared for it. My 10-month-old daughter, going to be 11 months old in a little over 2 weeks here, chirping in the background. I apologize for that. Moving over to the Qs. Yesterday came down to the bottom of what we're now establishing as a trend line right here, that it is possible that, again, we push lower from there. We had Amazon earnings come out, and those were generally positive for Amazon. A lot of demand for their products and their services, lots of growth in the direction of AI for Amazon. But then also we had AMD come out. And for AMD, their earnings were still positive, but not the rampant growth that we were expecting. So the change in that growth for AMD led to a bit of a sell for AMD. And that, of course, is what you're seeing here, especially with NVDA being tied to that in the AI infrastructure space. So we're seeing some more downward pressure in the pre-market hours. Like I said, some of that can be contributed to what we have from the Fed. Today could be a bit of a red day. We're going to have to watch and see towards the end of the market day what Jerome Powell has to say. Bitcoin also breaking out of its consolidation pattern here, selling significantly below. We broke the 60,000 mark. Now we're at 57.57 is where we're at as I currently record this. And then we have that next Fibonacci line down here at about 51. We need to be watching for that. And we also have the 200-day coming up towards it. For end phase, we got rejected again, and what we're looking for, we got rejected off the there we go, zoom in on that. The 13 EMA is what we're looking at, the yellow line that we have right in there. That rejection that we got yesterday, selling off again. There could be some more pain coming for solar. In the near term, I'll continue to dollar cost average into end phase, but I'm definitely watching that and considering whether or not I want to take a short option position on that one to hedge against the long position that I have with their stock. Over into Tesla. For Tesla, was sold off yesterday with potential cuts to with the cuts that we have to the supercharging team for Tesla, and really focusing more on their other projects that they have and more uptime for the current supercharging networks that they have. So with those cuts coming in, also a little bit more weakness to the stock price, and that means a little bit more pressure for Tesla itself to perform as a company, and they're doing whatever they have to do in order to make that happen, but that's not necessarily a good sign that growth is the straight path that they're on. Still up at about 178, 179, thanks to the China full self-driving news that we have. Moving over to NVIDIA, like I said, AMD earnings certainly impacting what we have for NVIDIA stock price at 850. That's what we have right here at this yellow line, which is just below the 50-day SMA, which is that light blue line that you see coming across your screen near the red line, which is the 50 EMA. And so trading down below that, we need to watch and see. This could only be a peekaboo up above it. We possibly see more pain coming in for NVIDIA. Now, mind you, we are 3 weeks away from their earnings. And so if we are going to get a run in their stock price, it's probably going to happen soon. If we don't get that run, but instead we get worried based off what NVIDIA had what AMD had for not as much rampant growth as expected for AI infrastructure for AMD. If that translates to NVIDIA, which I don't know that it does, then we could see some further price weakness. Now, mind you, the more price pressure we have, that price weakness going up to their earnings, that could be something that would be significantly bullish for NVIDIA. Before I let you guys go, I just do want to show you for Netflix, by the way, looking at the hourly chart, this descending triangle pattern that we have, slight upward bias that we have instead of being flat along the trend line here. Although if we go for the majority rather than where we had the engulfing candles, you can actually see the descending triangle. We could have a little bit more pain coming to Netflix stock price too before we continue back up again. So I wanted to toss that out there as a bonus. Don't usually cover a lot on Netflix, but I do want to say as far as the technicals go, we could sell off further from here and then fill this gap that we have in here back down to that 500 level. That would be a significant tumble from where it's at right now, but with these tumbles comes opportunity, and we know that Netflix is a massive company, and even though they might experience that pain at some point in time, it'll be overdone, creating those opportunities back into the market. So guys, keep an eye on that monthly and even quarterly chart for SPY. I think it is one of the most significant charts and technicals that we have in the market right now. Listen to what Jerome Powell has to say at 2:30. I'll be reporting on that back here on my YouTube channel, so come back and see me. Hit that subscribe button so you don't miss the video when it comes out. If you guys want to see my buys and sells and how I'm playing this market, you can do that using the link down in the description for the Patreon. Jump over to the Discord. That's where my buys and sells are, and my community. You can talk with me and my community members over there. And then also, if you want to learn to do technical analysis like I do, there's also a link down in the description for a technical analysis trading course where you can learn to take your trading game to the next level. Guys, I really do appreciate it. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.